Hi and welcome to this live currency strength indicator tables video. My name is John. I'll be taking you for the charts this Wednesday the 30th of November. Here you can see we have the live currency strength indicator tables in front of us. We have the trend traders table and the day traders table. These tables are showing the same studies but just highlighting different time frames. So our trend traders is the higher time frame, our day traders is the lower time frame. You can see here some of the currencies are highlighted in green. Those are showing confluences between the two trading time frames, and that's where we'll be focusing most of our attention in these videos. The tables auto update every 15 minutes 24/7, so wherever you are and you have access to the live currency strength indicator tables, you can get the latest update when you log in to the website. So what are the tables showing us today? Well, it shows us that the New Zealand dollar remains top of both tables here. You can see that it's followed by the yen as S2 on both tables, followed by the pound as S3 on the trend traders, Aussie S3 on the day traders. From the week side of things, we've got the Canadian dollar topping the charts as W1 on both tables. On the trend traders, it's followed by the US dollar as the second weakest currency, followed by the Swiss franc, which is the third weakest currency. On the day traders, W2 is the Swiss franc and W3 is the pound. So you can see the pound is featured here twice, but it's not highlighted in green because they're on opposite sides of the table. So what we're going to focus on, well, CAD is topping the tables. We've spoken about CAD previously, so we will take a look at that. I think this video today, I'm just going to highlight to you that a lot of the currencies that are featured on the tables at the moment are coming into some key areas of support and resistance. So you may want to wait for those areas, for price to trade through those areas in order to look for continued opportunities. Now you can see here I've got CAD highlighted. Price has recently traded up to this previous area of resistance in terms of this trend line resistance running through here. So you can see that we've had multiple touches of this trend line in the past where price has then rejected and moved to the downside. Now we're breaching that trend line, but it doesn't mean that just because we've got one move outside of it doesn't mean that we're going to see price just continue to trade to the upside. What we need to wait and see is if price closes above. If it does, then we need to wait for a second close, because if price pushes back below, comes back within the trend line, it could signal that we're going to see some further downside to the market. So at the moment, in a bit of limbo. If, however, price did continue to the upside, the next area of interest is this area up here where you can see we had this kind of consolidation. So around about the zero spot, 86.25 handle would be the area of interest. So that would be an area where if price was to continue, I would be looking for that area to be targeted. However, you can see here we've kind of moved in a pretty much a straight line. We haven't really seen any kind of pullback yet. Now, yesterday we had quite a large move in the market. So you can see here it was around about 155 pips, which is quite large considering the average true range of New Zealand CAD. Now, if you look at Chart Partner in the top left hand corner over here, we've got some information that can help you when you're looking at these markets. Okay, now if I highlight the first number just in here, you'll see that it pops up and it says today's pips gained or lost since the open. So if it's green, the instrument is up on the day, red if the instrument is down on the day. If I go to the second one, it says today's ATR, average true range, red if higher than yesterday's ATR, okay, showing that the volatility is increasing, orange if lower than yesterday's ATR. So it is lower, and you can see here 3-week rolling ATR. Now you can see the 3-week rolling ATR is 92 pips, while yesterday we went above that. Okay, we went above that. It was 100 and, like I said, 156 pips to the upside. So typically when we get a move outside of the average true range, the following day can be slightly smaller. So you can kind of see here again on the 23rd of November, price rallied by 175 pips, while the next day we had a very small move to the upside of only 60 pips. So you can see there as an example that when you get these larger moving days, the days that follow can often be quite shallow. So that's why I'm expecting nothing really to happen here on Kiwi CAD today. I'm expecting maybe a little bit of a hold, maybe even a pullback to start forming here. Now we're at this resistance level. So for me, Kiwi CAD is a sit and wait. I'm going to wait for a bit more confirmation after yesterday's large move. Now, another chart that featured on the tables was CAD yen. So we're going to jump over to CAD yen. Again, this is a market that we've actually benefited from quite well. So you can see CAD topping the tables as W1, yen at S2. So CAD yen is something definitely to look into. But we've been looking to get short around the 18th of November, and price, once it broke through the 104.50 handle, the 102 was our target. So the 250 pip target for us there, and if you did trade that move through there, you would have benefited from it quite nicely. Now price is at the 102, so we need to really start sitting on our hands here and wait to see how price reacts. Is this an area where sellers are going to start taking profits? I think so, because you can see here price found support here and here in the past, so why would it not find some kind of support again? Does it mean that price isn't going to trade through to the downside? No, it just means that we might have to wait here for a better opportunity to form. So if I go down to the 4 hour, for instance, and if I was looking at the 4 hour downward trend where price is making lower highs and lower lows, we're still getting that, but price at the moment is pulling back into the previous price action area at the moment. So the only thing I could suggest here maybe is, if you are a little bit more risk averse, if price was to come back towards this area here around the 103 handle, you might want to look for another move back down to the low. I wouldn't try and seek anything below 102 unless price trades through that level first, because we don't know how price is going to react to this area. At the moment, all we know is buyer stepped in at that point. So I would want to see price trade through the lows first, pull back, and then if we can continue to the downside and CAD yen still features on the tables, then great, we can start looking for price to continue to push to the downside there. Another chart that featured on the tables was Swiss yen. So we're just going to go to Swiss yen, just highlight the tables again. Swiss being W3 here, W2 on the day traders there. So Swiss weak currency at the moment, so naturally you'd be looking for that Swiss yen downside. However, you can see if I just zoom in here, price is at the 145 spot 25 handle, where you can see we've been in a pretty much a range between the 1 spot 45.25 and the 1 spot 50.25 handle for a number of weeks and days now. So around about 56 days we've been in that range. So we need to wait to see how price reacts now. Are we going to see price break through the 145.25? If so, then we can look for price to come down to the 143, which is this previous area where price found some resistance within a range again. So that's what I'd be looking for here. Looking to see price trade outside of this range of 145.25 with a view to look for 143. At the moment though, like with CAD yen, I think we need to sit on our hands because price isn't breaking through, it's actually finding support. If I just drop down to the 4 hour time frame here, you can see again consolidation, price finding support. So we don't really want to be jumping in short on this market just yet. Just want to keep waiting for a better opportunity to form. Again, just going on to Kiwi Swiss then. So why we're looking at Kiwi Swiss? Well, we featured Kiwi Swiss a couple of days ago, and you can see here that Kiwi Swiss features on the chart S1 as strong currency, and then the Swiss W3, W2 on the day traders. So we're expecting price to break back within this range. It has broke back within this range, but you can see here the momentum hasn't really continued to push price. And again, if I just highlight the let me just find a little bit of spare space here. Just jump up to a monthly time frame for a quick second. You can see here on chart partner on the left hand side, look at the ATR, 67 pips. That's the rolling ATR, and then you've got the daily, okay, around 52 pips. So if we go back to that daily chart, look at yesterday's price action. We had a 104 pip move. So again, nice large move outside of the range, the ATR range. So usually we'd get a little bit of a sideways day after that. So no rush to get into this one either. I think at the moment we need to sit on our hands. We do have some pretty important data coming out today involving the Federal Reserve. Chairman Powell is doing a speech, so maybe the market is just sitting waiting for that speech in order to then make some moves. Okay, so from me, that's all I'm gonna go through. I'm gonna sit on my hands today. You know, if you are a member and you are looking at this and you're thinking, oh, what can I do today? Then, well, why don't you go through the rolling currency strength indicator tables, the 30 days. Have a little look at how price has moved. Go all the way to the bottom. You can see we've got loads of data here that you can go through and study each day to see how price has moved. Do a bit of back testing. Okay, so thanks for watching this video. I look forward to speaking to you soon, and have a great rest of your day.